I know we all love the world of business and finance, investment and the markets, but let's get started from the world of sports. This is sports money. Let's talk about that. That's Nigeria's triumph over South Africa, 2-1 at the quarterfinals. So we're now through with the Super Eagles to the final leg of the 2019 African Cup of Nations. Congratulations to the Super Eagles and the entire country. I hardly do this on Business Morning, talking about sports first before business. But sports is big business. If you consider what would have gone down last night with folks very ecstatic about Nigeria playing and coming victorious over their South African rivals. So let's keep that there. We have a lot more to talk about sports, part of the expanded global news of Channels Television, Nigeria's news leader. I am Bosin Namafaya. Welcome to Thursday, the 11th of July. So Nigeria's central bank is driving another nail into the new policy towards expanded banking sector credit into the real economy. Late yesterday, the regulator told all commercial banks there will be no single interest rate payable to them anymore for parking their daily deposits in excess of 2 billion naira in the vault of the central bank. This is how it works. The central bank has what you call the standing deposit facility, where banks park their excess money on a daily basis, and the central bank pays them some nice, decent interest rate for keeping the money overnight. That has been the system. Now the central bank, in very short two-paragraph statement yesterday, says no longer will any interest be paid for putting any money in excess of 2 billion naira, and any money placed in this facility will attract interest rates prescribed by the Monetary Policy Committee from time to time. So we expect the central bank chief, Godwin Emefiele, to expand and explain more about this at the MPC meeting in a few days' time. The new provisions, according to the central bank, takes effect today, Thursday, July the 11th. And this new policy was an update of the central bank's guidelines on assessing the CBN standing deposit facility regulation, which was issued in November 2014. So about 4 years after, the central bank is reviewing that policy. Prior to 2014, banks placed their liquidity as much as they want. The central bank will be paying them some interest, which the regulator at that time capped at 7.5 billion naira. Now the central bank has giving the banks a haircut, a very steep one, from 7.5 billion to just 2 billion naira. So as the market reacting to this, ARM Securities wrote an investment note, which was released late yesterday, says, quote, "We believe the impact on income for the top 4 Tier 1 banks, that's GT Bank, Zenith, UBA, and FBN Holdings, will be minimal, as we expect such funds to be redirected to Tier 2 banks, the perpetual net takers at the SLF, that's the standing deposit facility, SDF, if you can pardon. So that's the SLF, yes, standing lending facility. You may call it standing deposit facility, means exactly the same thing. And that's the big story this morning. Everyone is reacting to that. We'll get more reactions on that later on the show. Meantime, Nigeria's Vice President, Professor Yemi Osinbajo, yesterday hosted a team of capital market top officials from the London Stock Exchange Group and the Nigerian team as well, talking about how to deepen UK, Nigeria, and Africa's capital market relationship. Let's take a listen to the leader of the team from the LSE Group, that's the London Stock Exchange Group, Sunil Bakshi, as well as Olutola Boboluri, who represents the Nigerian team as far as the Nigeria Capital Market Implementation Council is concerned. Take a listen to both of them.
Africa Advisory Group has a mission on behalf of the London Stock Exchange to help deepen the African capital markets. And Nigeria is a very important country in Africa. And for us, it is a strategic partner. And so we are working very closely with the Nigeria Stock Exchange in a number of initiatives to help deepen the Nigeria capital markets. In all emerging markets, including African markets, there is a need for greater transparency, for greater liquidity, for greater standardization, and for greater innovation. And our belief and our principle in setting up the Africa Advisory Group is that London can partner with exchanges such as the Nigeria Stock Exchange to the benefit of the local capital markets. So, as just one example, we've had a very good discussion today around the topic of linking financing better from pension funds to infrastructure. And that is an area that will be referenced in white papers that we have produced last year.
We would like to see a financial system that is all-inclusive, that is not focused only on the banks, but that includes, the capital market, even insurance companies. Two, we would like to see how we can raise, the savings rate for Nigeria, not only from individual savers, but also on an institutional basis, because we cannot grow the economy without savings. So we're working on a savings scheme, a national savings scheme for Nigeria, strategy for Nigeria. If we succeed in that, believe me, we can transform the economy. We also want to be, as part of that savings strategy, to expand, the venture capital and the private equity market, to strengthen the financial system here and provide to every Nigerian with brilliant ideas risk capital that they can use in starting their own businesses. If all the people with brilliant ideas were to be enabled to start businesses, believe me, like I said to the Vice President, 1,000 flowers can bloom every day. And we need to do that to reduce unemployment.